Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mark-eitel.
All right, my name is Mark-eitel, and you are listening to the Mr. Mortgage Show. And just like that big boxing announcer, we're going to come out swinging. We've got a great show for you this week. We're going to give you the information and the data you need to make better real estate and mortgage decisions for you and your family. And each week we start with the headlines, and we we dig past the headlines into the data because oftentimes the headlines are so super scary. And then we get to your questions, too. And we had a lot of great questions come in over the week. And I know we're going to have some callers this week also, too. I mean, there's a lot of questions surrounding this big inflation number that we saw this week and the increasing interest rates. And does it even make sense at this point to buy or sell or refinance? So we're going to cover all that. You're in the right place if you want that information. And if you want to get your questions on the air, give us a call or shoot us a text. Write this number down, 561-291-8569. That's 561-291-8569. That is the Anytime Hotline, and you can get your questions on the air right now today. Dom's my producer, and he's manning that hotline. So, hey, before we jump into this week, I just want to give a shout-out to Willow Title Services. We are always excited to have them on board. They are one of our featured sponsors, and I just wanted to say hello to Heather and the team and thank them for being a part of the Mr. Mortgage family. If you have title questions or need a transaction handled, even the complicated ones, they're super, super good with the investor, the flips, the assignment of contracts, all those transactions that might have a little hair on them. Willow can knock them out of the park. So give them a shout or visit them online, willowtitleservices.com. Check them out at willowtitleservices.com. So, So on with the show. We're going to start with this week's headlines. And one of the headlines that jumped out at me was the residential real estate contract cancellation jumps to nearly 15%. And on the surface, that sounds super scary. And it's packaged right between articles that say, mortgage applications fall, interest rates rise, and you read this that contracts are canceling at a 15% rate. It's easy to assume it's a byproduct of the interest rates. I don't believe that's the case, and we're going to discuss that now. So it's interesting, it's informative, it's something to watch, but it's the effect of something, and I don't think interest rates alone are the cause. And here's why I say that. I dug into the data, and I see that last year, the summer of 2021, contracts were canceling at an 11% rate. So 11% to 15% sounds less scary, but listen, that's still a significant jump. What's that, nearly 25%? But the reality is, what's different about the real estate market in the summer of 2022 versus 2021? I'm going to give everybody a minute to think about it. All right, we're not going to give you a full minute. I see the guy in the back of the class with his hand up, but I know what he's going to say. Here's what's different. In the summer of 2021, we were in the middle of the crazy seller's market. Buyers were waiving all of their contingencies. They were offering their firstborn to the seller to get their offer accepted. So they were waiving their inspection contingency, their finance contingency, their appraisal contingency, and much, much more. And why is that significant? Well, those are the three biggest opportunities for a buyer to cancel a real estate contract. So those weren't in the contracts of 2021, and cancellation still happened at an 11% rate. So the reason why I think all of this is significant is those are back. We're seeing finance contingency, we're seeing appraisal contingency, and we are seeing inspection contingency offers being accepted. So from where I stand, what I'm seeing in my daily practice, I don't see a big uptick in cancellations. So that number doesn't scare me for that very specific reason. The right for a buyer to cancel wasn't in the contract last year when we saw an 11% rate, and they're in the contract again now. And here's another thing to think about. If you're following the normal buyer cycle to get from offer to contract, you start with the pre-approval, especially in this market. no sellers, well, I can't say no sellers, but very few sellers are accepting offers from buyers who are not fully approved. So it's hard for me to imagine the interest rate is a surprise to somebody who's already approved, most likely has their rate locked, and are now entering the contract phase. So I don't believe interest rates are the reason why the contracts are canceling, because you already know what your payment's going to be. You already know what your interest rate's going to be. Now, the interest rates are certainly putting pressure on the market, and it's slowing down the buy-side activity in general. So there are less offers, but that's a different effect than, the cancellation jumping to 15%. So in my eyes, that's not a scary headline, but it was portrayed as one. The other big news, I guess, and the biggest news of this week was the inflation number jumped to 9.1%. And again, that should not surprise anybody except, sadly, our leaders in Washington, because they keep telling us not to worry about inflation, yet we're seeing all this pressure in our daily lives. That put upward pressure on interest rates across the board. Not so much that number alone, but the murmurings from the Federal Reserve heads that they would not be opposed to a 1% rate hike later this month. So the markets are anticipating a more aggressive move than the 75 basis points, and it's getting priced into interest rates. So we did see a little upward pressure on rates this week. So that's all I have. I'm not going to spend a lot of time in the headlines because oftentimes they're misleading to begin with. I wanted to shake those two out, primarily the contract cancellation number. But the reality is, so many people are frustrated by this market, and I get it. It's super frustrating. It's expensive to do anything. I mean, putting gas in your car is so expensive at this point. I get it. People are walking around just angry. They're in a fog. They're trying to figure out, what the right move for them is, and they feel like they missed the boat. And I don't know. I sense a lot of people are looking for the government to come in and save us somehow. I saw a news report this week about Palm Beach Gardens putting a new rule in place that landlords can't increase the rent more than 5% without notifying the tenants at least 60 days. I believe that was the rule, 60 days in advance. Well, that's great. You have a little more notice, but it doesn't change the fact that your rent's going to increase. So I don't know how to say this and sound delicate, but nobody's going to come riding in on a white horse and save us. I mean, heck, our leader can't even ride a bicycle, let alone stay on a horse. So I don't think there's any relief coming from the government. And honestly, I don't think they know how to help in the housing market. I really don't. But I think it's up to us. I mean, what Michael Jackson back in the 80s came out with that song, Man in the Mirror. I really think it's up to us to just, do the best we can to manage our individual lives. And that's, we're going into a recession. I believe we're already in a recession. Inflation is scorching. People are cutting back where they can. And we're seeing some pressure on the consumer. We're seeing car repossessions have spiked. We're seeing consumer debt spike. But we've got some solutions for that I'm going to share with you as the show goes on. But I just encourage everybody to remain positive, to dig in, to manage your own solutions. Don't wait for the government. And real estate is an amazing opportunity. That's why we're on the air. That's why we talk about what we talk about. If you had a mortgage and you had a fixed rate mortgage payment, no landlord would be coming knocking on your door raising your rent, and you'd be building equity. And yes, I get it. From this point forward, it would be a slower pace, but you'd still be building equity. And the reality is, I don't know anybody who bought real estate 10 years ago who aren't in the profit big time today. And if you go back 10 years prior to that, I think every 10-year window, including the window around the Great Recession, real estate in the long run turned out to be profitable. So time seems to heal all in real estate, certainly in real estate. And I heard this said, and I've shared it before, and I'm going to share it again. If you want to make money in real estate, don't wait to buy and then wait. And I think that's where we are right now. I think, there's millions of excuses out there why we shouldn't do something, whatever it is. Go to the gym, eat healthier, or look at figuring out a way to buy real estate. And that's where we are right now. It's up to us. And when we get back from the break, we're going to give you the answers and the info you need to make those better decisions for you and your family. So hang with us. We'll be right back. Thanks.
Buying a home can be stressful. Willow Title Services will help you close the deal. Offering tailored services for your unique home buying needs, you'll have a single team member guide you from day one to the day you get your keys. They have a combined 50 years of experience, so trust the closing experts and contact them today. Visit 8198 South Jog Road in Boynton Beach or call 561-737-1630. That's 561-737-1630. Willow Title Services is rooted in experience to help you get to closing.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. My name is mark-eitel, and you are listening to the Mr. Mortgage Show. And it is always our goal to give you the mortgage and real estate news and data that you need to make better decisions for you and your family. So, hey, I just want to carry that thought forward a minute. I was, kind of in the middle of all of that. It's up to us to save ourselves. There's no prince on white horse riding in to save us, or what is it, knight in shining armor? I don't remember the fairy tale, but yeah, that guy's not coming. It's up to us to make it happen. And the inflation number kind of hit everybody in the face, and I get it. There's a lot of pressure on the consumer right now, and equity management is one of the ways around that. I want to share one quick story. We did a refinance loan, or we're in the middle of the process. I met the client this week, and they're going to refinance some credit card debt and a car payment or two. And the reality is they just got in over their heads, and they bought their cars at a time that cars were selling for all-time highs, so they can't sell the car. Because they owe far more than it's worth. And they've got a decent interest rate, not a great interest rate. It's about 8% on the car, but they can't refinance it because they're upside down on the car as well. So those two car payments alone are pretty big numbers too. It's almost $2,000 for the two vehicles, which blows me away because I'm used to mortgage payments being less than that. But anyway, they're going to use some of the equity in their property and do a rec loan. You hear me talking about it. That's the reduce, eliminate, and consolidate refinance. They're going to pay off the cars and the credit cards and then just kind of hunker down and hopefully, be better stewards of their finances and just ride through any financial uncertainty. Because the reality is, even if their credit card payments weren't going up, which they are because the Federal Reserve is raising interest rates and seems to be determined to, pull rates up higher than Jerry Nadler's waistband. And that's pretty high if you've ever seen those pictures, but sorry, Jerry. Anyway, the Fed's intent on continuing to raise rates, so those credit card payments are going to go up. And they see that. They see the writing on the wall. And while they're still, super credit worthy, they've got great jobs, they're figuring out, let's just hunker down. But also, too, if that wasn't happening, life is just more expensive. And that 9.1% inflation rate was part of that. So, or a part of the news, I guess, and that's what's making me share this story is even if all your financial house is totally in order, you're still getting pinched in this environment because of all of the expenses of life are costing you more. And there is some relief in a rec refinance for these particular people. So I just want to share that because sometimes we think unless we're lowering our interest rate, it doesn't make sense to refinance. And sometimes it does, because they're going to save a considerable amount of money monthly by doing that. So I just wanted to throw that out there. I still had the notes in front of me from that 9.1 inflation report. And, what made me realize another thing, too, that we need to control our own destinies is because nobody seems to have an answer for this. I mean, I read an article that it was an interview, rather, with Bill Smead, I think his name is, or Sneed. I'll post it to the Facebook group. Go to Facebook and search the Mr. Mortgage Show. I'll post it there. But in that interview, he blamed inflation on millennials. And I was talking to Dom before the show, and I'm going to pull him in on this because I want his opinion. So for those of you hear Dom's voice each week. Dom is a millennial, a proud millennial, but he's also an awesome dude, and he's done an amazing job managing his particular financial life. He's in control of his own destiny. So, Dom, this gentleman, Bill Smead, says millennials are causing inflation because you guys are hyper consumers. And we were talking about this. You guys aren't hyper consumers, are you? I know you. I guess let me speak to you. You're not a hyper consumer.
No.
Do you have a car payment?
No.
Okay, guys, he doesn't have a car payment, but he's got the coolest car in the parking lot. I promise you that. He saved his money and he bought himself a very cool car. Hey, Dom, do you have any credit card debt?
No.
Okay, no credit card debt. So he's not out there spending money he doesn't have. Now, I'm rolling the dice on this one because I don't know the answer. Student loans?
No.
No student loans. Okay, ladies, I'm going to post a picture of Dom on the Facebook page because he is the man. This is the guy you're looking for. So your generation, because I know you from doing the show now, your generation seems to be more focused on experience. Am I right?
Yeah, that's true.
Vacations, sharing social activities with your friend.
Enjoying the moment.
Exactly. You guys seem to be the backpack, tiny house, van life, granola, leave a low carbon footprint and just experience life. Okay. You guys are laughing at my generation who are still paying off credit card debts and country club memberships that we never use. So my point in all that is Bill Smead is trying to blame inflation on a generation that doesn't consume. Dom and I talked about it in length, and he and his friends are big into investments, and they manage their lives on their phone. And Dom could put his backpack in the back of his sports car and be okay wherever he is. And me, I'm taking 2 U-Hauls and some buddies in a pickup truck just to move the junk I've accumulated over a lifetime. So even Bill Smead and the team, I don't think they have any idea what's causing inflation. So if we're waiting for somebody to save our butts, we're waiting on the wrong guys. It's up to us. So anyway, I just wanted to finish off on that because I really, really believe real estate is a great opportunity to do just that. And, I'll share a story later in the show because I don't want to get sidetracked. I want to jump into your questions, but I'm going to share a story of 3 different clients who went through and handled their real estate during the Great Recession differently and their 3 outcomes. But before we get to that, let's jump into your questions. I always appreciate your participation, and that's the purpose of this, is to get you the data, the answers, and the resources that you need. So let me throw it over to Dom and see what we have question-wise.
Amanda sent a text. I'm a teacher. Do I qualify for the Hometown Heroes grant? Can you explain the program?
Hey, Amanda, that's a great question. So yes, a teacher does meet the criteria for Hometown Heroes. The lenders who are participating in that program right now are limited. So we sadly are not participating in it, but we have, with many, many other mortgage companies throughout the state, have petitioned the governor's office to open it up to more mortgage companies. Right now, it's limited to a few banks. But as I understand the program, it's not a grant, it's a second mortgage, which will allow you, if the program that you qualify for, the first mortgage program will allow it, you could qualify for up to 100% financing. But it's not a grant, it's a second mortgage the way I understand it. I've only seen one applicant with the Hometown Hero program, and we reviewed their fee sheets and we reviewed their package, and we found that we were able to do an FHA loan with a gift for the down payment, and we're able to achieve the same thing with far less cost. So I think it's an amazing program, and it's awesome that the state has done something to open up opportunity for homeownership to all of that Hometown Hero category that serves our community. Police, firefighters, nurse, doctors, teachers, mental health employees. You know what? I'll post that to the Facebook page too, because I think it's a useful resource. And awesome question. But yes, teachers do meet the requirement for Hometown Heroes. So, hey, Dom, do we have another question?
Randall is asking, I'm planning to refinance my house, pull out some cash, and then buy a new house. Will this work? Isn't there a rule about borrowing the down payment?
Hey, Randall. Hey, that's an awesome question, my man. And you have obviously done your homework. So there are a few moving parts to this answer. You want to pull cash out of your property. I'm guessing that it's your primary, but I don't know that. But you said my house, or Dom read the question to me, my house. So I'm guessing that's where you live. And then use that money to buy another property. So yes, there is a rule about borrowing a down payment, but if you're pulling equity out of your property, that's not quote unquote borrowed funds, because that is your money. It's your equity. Now, you have to qualify for the loan with the higher loan amount, debt service. But where you might run into a problem is if you're doing a cash out refinance on your primary residence as a primary residence, and then you're intending to go out and buy another property and move into the other property and rent out the what they call departing residence, there may be an issue where you're violating the occupancy rule. And that is sadly mortgage fraud, my friend. So I would love to talk to you about that in length, because if you're doing a primary residence cash out refi, that needs to remain your primary residence. Otherwise, you have to do the refinance on your current home as an investment property, which is an option for sure. And then you can go out there and buy the new house. So I hope that helps. I'd love to talk to you more about it. You can call us during the week on the Anytime hotline. Or if anybody else has questions, use that number now. 561-291-8569 is how you get your questions on the air or to us during the week. We'll be right back.
Buying your home is likely the biggest transaction you'll ever make. With stakes that high, you need certainty. Willow Title Services strives to take the stress away by providing a single point of contact with clear communication, resulting in a painless and positive experience. Willow Title Services has over 50 years in industry-leading and closing techniques, rooting them in the experience needed to get you to close. Call Willow Title Services at 561-737-1630 or online at willowtitleservices.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. My name is mark-eitel, and you are listening to the Mr. Mortgage Show. And after I read Dom's dating bio online, I see a couple of attractive young ladies out in the parking lot leaning against the coolest car out there. So, hey, whoever's waiting for Dom to meet him for lunch after the show, he might be a little late. So anyway, just having fun with you. Hopefully that answered your question. I didn't mean to imply that you intend on committing occupancy fraud. I just wanted to make you aware of that. There is a clause in the mortgage contract that you're claiming that's your primary residence. So just be careful if your intent is to pull money and then move quickly, because if that is your goal, there is a strategy to accomplish that and make sure that all of the I's are dotted and the T's are crossed and you are in the clear with that. So I hope that helps. But let's throw it over to Dom for another question.
Glenn emailed this. Equity line or debt consolidation refi, paying off credit cards and a truck, which is better?
Hey, Glenn, you must have heard that segment a minute ago where I was talking about the client who's doing the rec refi. That's a great question, and that's really is a lot has a lot to do with your timeline. So 2 years ago, the answer was equity line because, well, actually, I don't know that would have been the case then either. Let me just go through the pros and cons. The equity line is an easier transaction, usually less fees, interest only for up to 10 years typically. The interest rate moves with prime. And then after 10 years, if you still have a balance on the equity line, it'll typically convert to a 10-year loan. So sometimes a 20-year loan, depending on the bank and the balance. So that's an easy path to capital. Now, if you just want to grab that capital, pay this down, and your goal is to quickly pay off the equity line, brilliant strategy. Also, too, something to factor in is what is the interest rate on your current property. If you're one of those guys who scored a 2.875% 30-year fixed rate, then you don't want to disturb that mortgage if you don't have to. The equity line may be the way to go. Now, the downside to the equity line is the rate moves with prime. So we all know what interest rate environment we're in. Rates are right now on the equity line is around, depending on your credit score, could be 4.875% to about 6.875%. So not nearly as attractive as it was 2 years ago. 30-year fixed rates for cash-out refis are in the fives. It may make sense to do a cash-out refinance, pay that stuff off, and then never look back. You don't have to worry about the rate adjusting. You don't have to worry about the timeline when the interest-only period expires on the equity line. Another thing with equity lines, if property values fall, they can reduce the balance or reduce the available balance of the equity line. So you may not have access to that cash if you're just, kind of storing nuts for the winter. You're going to use it later. But the equity line's a great tool. I never steer anybody away from it if it makes sense to them. I just like to point out, the pros and cons of both. The cons of the cash out refi, obviously, you're now paying that car loan and credit cards off over a longer period of time. So if you do a 30-year cash out refinance, then you're now paying that truck off over the next 30 years. But, at a much lower payment. But if you take the total interest over the life of the truck, you're paying more for it in the cash out refinance. On the credit cards, I'm not sure you're paying more interest because nobody ever seems to get those caught up. But that would be my answer. Equity line is an easier access to capital, but I would definitely want to have a strategy in place where I was paying that off, in 5 years or less would be my goal, assuming that there were 5 years left on your truck payment. Or a cash out refinance may be the way to go, because while you're increasing your interest rate on the mortgage, and maybe you're not, I don't know what your mortgage rate is. I'm just using, best and worst case scenarios in this example. You may be increasing the interest rate on that, but you're saving so much a month by paying off everything else. So not an easy question to answer, but one we are seeing more often during our daily practice. So hopefully that helps. I encourage you to give us a shout during the week if you want more information. But yeah, equity line versus cash out refi, I believe, is going to become the great debate moving forward. And if the Fed keeps clubbing interest rates over the head the way they are, it's going to be an easier decision moving forward. So hopefully that helps. But in the meantime, let's get to more questions.
Another email, Jackie is asking, we'd like to sell our house to our son. We're not sure what's best, offering seller financing or help him get a mortgage. What do you think?
Hey, that's a great question. So, wow. I don't know that I can completely answer that, but awesome that you have the ability to do that for your son, because, there may be some, and I don't know how long you've owned the property, but there may be some tax advantages to you selling it with owner financing. If it's your primary residence and you've owned it for more than 2 years and it's you and your husband, you can take up to $500,000 in capital gains tax-free. So if you're selling your primary and you're going to profit less than $500,000, then there may not be, a distinct tax advantage to seller financing over helping him get a mortgage. I think it's awesome that you're willing to do that. From his standpoint, if the goal is to build his credit, then helping him qualify for a mortgage and make that purchase would be the better option of the two, because then he's going to have, a mortgage reporting on his credit report. He's going to be building his credit. You will take all of the cash out of the transaction at one time, so it'll be a cleaner, process, if you will. But there's a lot around this. What is the long-term goal? If you pass, does he inherit the property? And then, I don't know. There's a lot to think about there, but there could be some tax benefits to seller financing over selling it outright. But again, there's a lot more I would need to know, and I would encourage you to consult a tax attorney around that. But from his credit standpoint, having that mortgage report on his credit report would help him. But you could easily help him get a mortgage by giving him a gift of equity. So I know not a real clear answer there, but there's a lot of moving parts around that. So if you require additional information, I'd love to talk you through it. Give me a call during the week, 561-291-8569. And that reminds me, we had a couple calls during the week. We had a couple people call in last week with some really, really good questions. And I talked to them during the week, and I got their permission to share the answers and kind of give an update with where we are. So I don't know if you remember, last week there was a woman, Dawn, who I think she emailed her question in. She and her dad was encouraging her. She's a first-time buyer, and she was super nervous. So we did a conference call. Dad got on the phone. Dawn got on the phone. I got on the phone. And we determined that Dad is able and willing to give her a gift to assist her with purchasing her property. She's got great credit and a great job. Hey, wait a minute. Maybe I should introduce her to Dom, because these two could be a match, because she is a definitely a millennial who's managed her finance as well. But anyway, Dom, I'm already marrying you off. Dawn qualified for an FHA loan, and her dad is going to help her with the down payment. So she's out there with a full approval in hand looking right now. So that was an awesome win, I guess, if you will, from one of our listeners last week. And then Oliver called with questions regarding a reverse mortgage. And his biggest concern, he and his wife, their biggest concern was what happens when they pass away. So when they die and that property goes to their estate, their biggest fear was that their kids were going to have to make up any negative equity. Their fear was, we owe more than the property's worth when we die. I don't want our kids to be burdened with those expenses. And their kids are super excited about them getting a reverse mortgage because they know what a difference it's going to make in their life. And I just wanted to share the answer to that, because a lot of people have that question. And the reverse mortgage is a non-recourse loan. And what that means is, when you die, if you owe more than the property's worth, your kids just hand the keys back to the bank. Even if you have millions of dollars in other assets, the loan is non-recourse, so they won't have to touch any of the other assets to satisfy any deficit. And that's because there's an insurance policy built in to the loan program that insures the lender against loss. So Oliver gave me permission to share that, because I think a lot of people have that misconception. So anyway, those were two really, really nice people that I got to talk to, or more than two, but the two people that spawned the conversation this week. Really cool people. And I appreciate the opportunity to talk and serve talk with and serve both of them. So anyway, you hear the music. That means we're going to jump into a quick break. We'll be right back for more of your questions.
New to South Florida and ready to sit down roots with a new home? Willow Title Services makes closing a smooth, painless, and positive experience. With individual service for each buyer's needs, Willow Title Services has a combined 50 years plus of experience with industry-leading closing techniques. Call Willow Title Services today at 561-737-1630. That's 561-737-1630. Online at willowtitleservices.com. Willow Title Services is rooted in experience to help you get to closing.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark-eitel and the Mr. Mortgage team.
Hey, it's Mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. My name is Mark-eitel, and you are listening to the Mr. Mortgage Show. Hey, and if you like what you've heard so far, check us out online. You can catch us on the iHeart app 24/7. Just go to the iHeart app, search the Mr. Mortgage Show, will pop up. I do a Daily Dose podcast that drops at a website called Mr. Mortgage Radio. So go to mrmortgageradio.com, check that out. And then you hear me talk about the Facebook page all the time. Dom and I post all of the articles and the data, the information we use to get your questions answered each week. So go to Facebook and just search the Mr. Mortgage Show. There's a ton of info there. And lastly, go to Mr.Mortgage. Check out www.mr.mortgage. That's our corporate website, and there's a ton of useful info there too. So that is all of the ways you get us during the week and online if you need us. So I'm going to throw it over to Dom and keep your questions rolling. We're going to try to do a rapid round and get caught up here.
Colleen sent a text. Boxers or briefs?
Colleen. At my age, depends. Kaboom. Boxer briefs, Colleen, but thanks. You know what? That reminds me, I probably need to go get a couple fresh packs because I wear them until they have holes in them. So it's about that time. But yeah, thank you for that. Hey, Dom, what else do we have?
This one is from Kim. Thanks for everything. We closed last week and couldn't have done it without your help. Your insurance guy saved the day.
Hey, Kim, thanks for that. And that's Mr. Kim, by the way. I guess I'll share the story. I forgot about that. So they're buying an investment property that needed some repairs completed. And the homeowner's insurance coverage, the property wasn't insurable the way it is, and a lender won't fund a loan against a property that's not insurable. So a couple of lenders had taken a run at it and were unable to do it. But we've got some awesome resources, and I guess it's just because my team and I have been, kicking around these parts for, more than 20 years in the business. But we were able to secure through an insurance contact I have a builder's risk policy on the property that stood in front of the homeowner's insurance. So the homeowner's insurance policy, the homeowner's insurance agency was okay with insuring the property because the builder's risk gave them the coverage they needed to complete the renovations because they were buying it in disrepair, if you will. It wasn't complete. And the lender was okay funding, knowing all of that was in place. And they had the assets, and they already had the contractors lined up to complete the work. So it's complicated. It's not always doable. In this case, all of the ducks fell into a row, and it worked out. So, hey, thanks for that. Thanks for checking us out on the air, and I really appreciate you saying that. So anyway, hey, Dom, let's keep it going.
Alex sent this email. What is the cutoff for a jumbo loan? I'm trying to calculate the down payment required to get the best interest rate.
Hey, Alex, that's a great question and very, very smart of you. So $647,200. So $647,000 is the new limit for what we would class a conventional loan. Once you go over that, you're in the jumbo category, and the guidelines are slightly different. And most often it carries a higher interest rate. But before you put that big down payment down to get to 647, if you do indeed have to put a big down payment down to get there, I'd love to talk to you because we have some very aggressive pricing in the jumbo category. It's called the Elite Series, and there are higher credit score requirements and some higher net worth requirements, but the rates are super attractive, and you can borrow well over $1 million. I mean, we're doing them up to $2 million right now in that elite category and seeing some super aggressive rates. So that might be a strategy. I have no idea what purchase price you're looking at, but to answer your question, it's 6472. So hopefully that helps. Let's throw it back for more questions.
Tammy sent a text. We had a foreclosure in 2015. Our 7 years are almost up. How soon after the 7 years can we apply for a mortgage?
Hey, Tammy. Oh, man, I wish we would have talked sooner. So that 7 years is let me explain this. So your time is well over already. You can apply now. What I want to share is a bankruptcy will stay on your credit report for 7 years. A foreclosure will stay on your credit report for 10 years. And a lot of people get those two confused, and then they think they can't apply for a mortgage until those are off their credit. And there are a lot of loan programs out there post-bankruptcy and post-foreclosure far sooner than that 7 and 10 year number. So, man, I wish we would have talked sooner because assuming you rebuilt your credit and you're in the position now to do it again, you most likely would not have had to wait this long. But I guess the good news is you don't have to wait anymore. So I'd love to talk to you. If you have any questions, give us a call, 561-291-8569 during the week. That number pushes to my office. But Tammy, thank you so much for that question. But I believe your wait is over. So let's throw it over to Dom.
A text from Dave. Crypto is crashing. The stock market is likely next. We have the beginning of World War III in Ukraine. How does buying real estate now make sense?
Wow, Dave, my man, the end of the world is coming. What's that old REM song? It's the end of the world as we know it. Hey, for anybody who was ever wondering, that's why I play the drums on the weekends in my band and I don't sing because that's the best I have. But anyway, man, you are doom and gloom, brother. But I get it, right? That's what all the headlines are screaming at you. But I'll ask you this. Let's assume that all of that negative stuff happens. Let's assume we go into a full-blown recession and we're in World War III. Where are you going home to sleep at night? You're paying rent or you're paying a mortgage or maybe you're sleeping in your mom's guest room. I don't know. But the reason that I think it makes sense to buy real estate is I can go back through every cycle, including world wars and Vietnam wars and Korean wars and Iraqi conflicts, and look at the historical performance of real estate, and it's worth more today than it was then. So I'm not at all dismissing the scary news out there. I'm personally getting my financial house in order in anticipation of some tougher times ahead, but I'm still participating in this economy, and I'm participating in trying to live the most active and best life that I can for me and my family. And owning real estate is a great option for all of that. It's a great hedge against inflation. It's a great opportunity to build equity regardless of all of those other categories of the economy and world politics. Taking a big brown one on the front porch. It's not a scary place to be. As long as you have a job and you can make your payments, I think making the purchase is a sensible decision if you're able to do it. And I'm just going to leave it there because I don't want to dismiss it. I mean, crypto, wow, that's been a wild ride. And you see these crypto lenders going out of business and these crypto hedge funds, and they can't find the founders of the hedge fund because they're afraid they're going to jail. I guess it's crazy. So I don't dismiss any of the scary stuff, but I do think real estate is a safe harbor against all of that. So, that's all I got for you. I'd love to talk to you more about it, but I think you and I would probably be the ones enjoying that conversation the most. So let's spare the listeners that and give me a shout during the week, and I'd be happy to chop that up with you because I do find a lot of that scary and concerning. It's not taking me out of the game. So anyway, I hope that helps, and I don't dismiss your fear. I just don't share that same mindset. So any questions, you can get us during the week. But hey, you hear the music coming up behind me? That means we are going to step into a short break. We'll be right back.
Buying a home can be stressful. Willow Title Services will help you close the deal. Offering tailored services for your unique home buying needs, you'll have a single team member guide you from day one to the day you get your keys. They have a combined 50 years of experience, so trust the closing experts and contact them today. Visit 8198 South Jog Road in Boynton Beach or call 561-737-1630. That's 561-737-1630. Willow Title Services is rooted in experience to help you get to closing.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the rec loan he advertises. Long story short, we did a rec refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. My name is mark-eitel, host of the Mr. Mortgage Show, and this is the place you get all the information, the data, the tips, the tricks, the insight that you need to make better real estate and mortgage decisions for you and your family. And hey, I just want to double back to Dave's question right before the break. I don't mean to be harsh because I don't want to discount all of those fears because it's a scary time out there. But I touched on this early in this week's show, and this is a perfect time to get to it. I have 3 clients that handled their personal financial house, if you will, differently during the recession of the earlier in the 2000s. I think it hit here around 2008. And according to some of us, it hasn't stopped. But anyway, I've got one gentleman, and I'm just going to use first names. Let's call him Palm Beach Gardens Paul. He chose a strategic default. So they had the money. They were able to make the payments. They had great credit. But like very many people, they were solicited by representation who encouraged them to do a strategic default. So they stopped making their mortgage payment. They went to court. They had a mortgage modification. They added fees to the back end of the mortgage. Long story short, they just sold their house in 2021, and they made money. And they bought a new house, and they've since, everything's back on track. But the reality is they left a lot on the table in those fees and those the court costs and the legal proceedings. They would have made a lot more equity, I guess is where I'm going with that. Another gentleman is in Port St. Lucie area, and let's call him Larry. Larry just gave the keys back to the bank. They just stopped making their mortgage payment. They went into foreclosure. Again, Larry had a job. He was making money. He could have made the bills, but he just didn't see the point in paying a $400,000 mortgage on a $200,000 house. So he and his wife and 2 kids went and rented an apartment in an apartment complex. And it was difficult for them to find an apartment because they had a foreclosure on their credit now. And they lived in that apartment complex, sharing a common parking lot and neighbors on all 4 sides for 8 years. And they built their credit back up, and they went, guess what? They went right back to Port St. Lucie, and they bought a house darn near identical to the one that they had given up. And they now have a ton of equity, but they would have had a lot more equity if they had ridden out the market. And the reality is they paid more for their car payments. They paid more for their credit cards along the way because they had that credit damaged by the foreclosure. And then lastly, let's call him PGA Andy. And you've heard me tell their story before. They bought a townhouse in PGA. They paid $385,000 for it at the peak of the market. Their neighbor's house went into foreclosure and sold at auction for $180,000. So on paper, they lost $200,000, and they were just as upset as the other two people, but they chose to keep making their payment. They liked the house. They were able to make the payment. And the reality was they couldn't have rented anywhere for any cheaper. So they just stayed there. It's been 17 years, but 17 years later, they have the house paid for free and clear. It's worth $550,000. And it's all equity. It's all their money because they made a different decision and they never damaged their credit. And they've got the house they love. And now they travel. They come back to the house on occasion. It's there. It's safe. It's everything they wanted it to be. Was that a bad decision? I guess is what I'm asking. I don't think so. Three very different strategies, three very different paths, and three very different outcomes. So my point in all that is don't get discouraged by today to the point that you forego it tomorrow, because these people made different choices, and the better of the three choices is the one that made their payment. They just stuck it out and the market corrected itself, and they're way back in the money. So anyway, I hope that helps. I hope that encourages you today. I mean, we've had some great questions today. I really appreciate everybody's participation. Always shoot us your questions. I always encourage them. 561-291-8569 is how you get them on the air. And we do very much so appreciate it. So, hey, we're to the portion of the show where I'm going to ask you a favor. If you like any of what you heard, if you think this is valuable to anybody, do me a favor and share the show. Check us out on the website. Go to Mr. Mortgage Radio. Go to Facebook, The Mr. Mortgage Show. Go to www.mr.mortgage. Heck, go to Google and search The Mr. Mortgage Show and we'll pop up. Share us with anybody that you know who's thinking of buying or selling refinancing properties. We'd be happy to answer their questions. We're trying to build the listener base and get the answers out there to as many people as we can. So that's it. We're going to wrap this up. Excuse me. Before we go, I just wanted to say one more thank you to Willow Title Services. You can find them at willowtitleservices.com. They'll take care of a smooth transaction and a smooth closing for you. Until next week, have an amazing week. Dom and I will be right back here next week, same station, same time. I'm going to stop talking now. Thanks.
That's a wrap. Join mark-eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.
New to South Florida and ready to sit down roots with a new home? Willow Title Services makes closing a smooth, painless, and positive experience. With individual service for each buyer's needs, Willow Title Services has a combined 50 years plus of experience with industry-leading closing techniques. Call Willow Title Services today at 561-737-1630. That's 561-737-1630. Online at willowtitleservices.com. Willow Title Services is rooted in experience to help you get to closing. Buying your home is likely the biggest transaction you'll ever make. With stakes that high, you need certainty. Willow Title Services strives to take the stress away by providing a single point of contact with clear communication, resulting in a painless and positive experience. Willow Title Services has over 50 years in industry-leading and closing techniques, rooting them in the experience needed to get you to close. Call Willow Title Services at 561-737-1630 or online at willowtitleservices.com.